Well, hello everyone, and welcome back to Man and Machine here with the PeakBot team and Mark Phillips from Harvested Financial. Happy Monday, everyone. Happy coming off of the Masters Monday to those of you who are fans of golf. But gentlemen, how are we doing this morning?
I'm doing good. I was happy to see Rory take home the W, take home the Grand Slam, sixth player golfer in history to do that, sixth male golfer in history to do that. But it was fun to watch. Mark, how was your weekend?
It was good. I got my Philip pimento cheese sandwiches, had some nice egg salad, some barbecue pork. I'm in the Masters for the food, for the culinary traditions.
Absolutely.
There you go.
Mark, you're just a big tradition guy. So Masters is right up your alley, and I'm sure you either had or made delicious pimento cheese sandwiches, which, by the way, I think I'm ashamed to say I don't think I've ever had one. I don't think I've ever had one, but maybe that's next here. So
You don't fitting too much into what is actually in a pimento cheese sandwich. Just enjoy it.
Yeah, okay. I won't ask questions.
Don't realize you're just eating butter.
Hey, I got no problem with that. So yeah, very fitting. We'll have a great show today. Stocks in Real Life is going to be about Nike. So I wore my Nike hat and fitting. Rory McIlroy is arguably one of Nike's most valuable athletes, taking home, again, as Ben mentioned, the career Grand Slam and winning the Masters. I have to tell you guys, I wasn't rooting for him the whole time. I really no, he's made it a little hard. We don't need to get into it. He's made it a little hard to root for him, like just kind of how he's handled himself in the media as of late. By no means am I a live golf guy, but I was behind Bryson, man. Like the fans were behind Bryson. He was electric. You don't see that at the Masters. I was about it, but I wanted Rose to win. I did, but I'm glad McIlroy locked it down. So anyway, a lot to get into today. As mentioned, Stocks in Real Life. We'll take a quick peek at PeakBot picks, and we'll learn a little something with Mark. We'll take a look at some economic events, etc. So let's get into it. Ben, PeakBot picks. I know personally last week was not my best week. Did you end up? Oh no, Thomas went 3 for 3, didn't he?
Thomas went 3 for 3. I went 2 for 3. I did let myself get assigned shares on silver.
Okay.
So I am currently holding those. And actually, I'm short silver. So I will be reverse wheeling them this week.
Okay. Nicely done. I love to see that.
Wheeling, so you're buying puts and selling calls?
I'm short shares, so I'm going to sell puts against my short shares versus selling a covered call against long shares.
Okay.
Yeah.
Thoughts? Tell us what's going through your head right now. Go ahead.
There's no reason not to on something that you have a directional bias on like that, right? There's no reason not to reverse that and collect the premium in your direction. So I like it. I'm not a big shorter. I'm scared out of my pants to short, but
Yeah.
if you like that, objectively, there's no reason not to.
Ben
Well,
likes
it's I'm calling it a hedge to my other positions that I'm trading with PeakBot because I'm pretty bearish on my trend spread picks this week. And if I'm short silver, theoretically, if that's kind of inverse to the market, if the market goes no, actually I'm not hedged. I'm going both directions. It's both going in the same direction.
All right, so Ben has some more thought to put into this, maybe. No, so this is why we talk through it. No, either way, Ben's had a good run on PeakBot picks, and I love that you're doing the man and machine, right? Pun fully intended. In fact, Ben and I, for this week of PeakBot picks, both of us actually entered our positions manually. Reason being, I won't speak for Ben, I didn't love my fills last week. I'm looking at the watch list for trend spread at 11:30 a.m., 11:40, and then 20 minutes go by and the trades go in at 12, which normally I've never had too much of a problem with. Love my fills. It's just this volatility in the market is causing things to move so fast. So man and machine, I let it enter. Now I'm putting it on the bot to manage it and smart exit if I take profit. So yeah, we'll take a close look at how things go this week. I got 2 call spreads and a put spread. Credit, of course. Ben, where are you at? I'm trying to see what direction you're going. It looks the same to me. 2 calls and a put.
Yeah, well, my put is on SQQQ.
True.
So it's still a bearish play.
Yep. Good point. So anyway, that's the highlight on PeakBot Picks. We'll keep everything updated, of course, and we'll be diving deeper into this on our Friday show, the Automation Station, just shy of noon Eastern. So check us out. Doug, man, I feel like I didn't know what I was missing until I saw Doug's name pop up. How are you? You missed. He's being sarcastic. He's being sarcastic. You missed a lot. You missed a lot there, Doug. I know you didn't miss it, though. You're tuned in. Yeah, we've been busy over here. So, all right. So PeakBot Picks is done. Let's get into stocks in real life. Let's talk about it. Just do it.
And this week, we're just doing it. Yeah. Stocks in real life. We've got Nike, ticker NKE. You know, before we hopped on, I could have sworn I've traded Nike before, but I went back to my Tradier history, and I've not traded Nike.
So, you know what may have happened, and obviously there's a lot we can talk about with this stock. What may have happened is you could have taken it in the PeakBot Picks contest, right? I mean, like while we were paper trading it still. So maybe that's why. I don't know. It certainly was a popular stock in that contest. I feel like Thomas was taking it a lot when they were just bearish on that whole run, which it finally turned around. We'll take a closer look at the stock. But before we do, I have some trades. Just a quick stat, and I can share my screen. I have these trades in my Tradier account. Ben, can I take your screen down for a second?
Yes, go ahead.
All right. So I have these Nike trades in my Tradier account, and I have 2 other credit spreads in a different brokerage. Altogether, I'm profitable. I've made an 11.5% ROI on all my Nike trades. Now, it's not huge, but it's $138 in profit with $1,200 in cash needed. So you can see here, I was bearish on this at the end of November. It looked like 3 weeks in a row, all to which look here, I believe, profitable. So, and then I had a couple other in my Tasty accounts. So Nike's been good to me. When I forget what happened, but while they were just getting slammed along with so many of the other consumer brands for months and months there at the end of the year. So,
We'll pull up a chart, but what's your guys' experience, stocks in real life as it relates to sports brands, athletic brands? What's your take on Nike?
Mark, you first.
I like Nike. I'm a big Nike. I needed a new pair of tennis shoes, and I just blindly size 10 dialing up some Nikes. I don't need to try these on. Every new pair of running shoes I get, every new pair, just dial it up. Nike's fit me.
Okay. Always.
Without exception.
Okay. Wow.
Big fan over here.
Oh yeah.
Since you were a little toddler running around, you've been in Nikes. Okay. I love that.
Mark, do you have a Nike guy?
You have a Nike guy?
I don't have a Nike guy. My last Nike guy was Dick's, I guess. So.
Let me tell you something. You go into the store, you go into the mall right now, there's so many shoe stores. And they're all these classics now. Like they have almost like that weird plastic wrap over it. They're like encased because they're all these like old school Nike shoes and they're worth all this. I can't believe the shoe game. Anyway, Ben, are you a Nike guy?
I used to be like Mark, and then I'd say over the last 2 years, I've been getting really into like Under Armour apparel. I feel like Under Armour's golf shirts just have a little bit more substance to them. Yeah. And I don't know, the Nike golf shirts, sometimes I almost feel like I'm wearing nothing. It's just like so like thin and loose, which is great for a really hot day. But in New Jersey, if you're trying to golf this time of year, you're going to want something with a little more substance.
A little more weight to it.
Yeah.
So that's interesting you say that. Ben, are you Nike's on your feet?
Yeah, Nike's on my feet.
You're a Nike guy. Okay. So I think I was a Nike guy growing up. My thing was when I graduated college, my first job was at the University of Maryland in the athletic department. So Kevin Plank, founder of Under Armour, obviously was at University of Maryland. So I couldn't wear anything Nike on campus, which meant my entire wardrobe went out the window. And I went UA for 3 or 4 years. Definitely more comfortable, I think, UA than Nike. I agree, like their fabric's better. But I'm past Nike on my feet too. I need wider shoes. Nike doesn't have wide shoes. I don't think they're super wide. So I'm on the Reebok game right now for shoes.
Reebok.
But anyway,
Nice.
let's take a look. I'm sure there's others personal experiences with Nike. But let's take a look at the stock. While you guys are doing some analysis here, I'm actually going to do what I've been doing, asking you guys when. I'm going to look up when it IPO'd.
Okay.
Do we have any guesses?
Oh man. I want to. Well, didn't they start out in like the 60s or 70s with a waffle iron? I think
that is the Phil Knight story. I've not read Shoe Dog, but their big deal was getting Jordan in '83. But were they a public company then? I bet you they were. I bet you we're talking an IPO '77.
Okay,
I'm gonna go with a little bit later. I'm gonna go with '93.
Wow. Okay.
A lot later.
Mark takes it. December 2nd, 1980. So
80, okay.
as they go public, start to bring in some more cash flow, and they go and sign Jordan 2 or 3 years later. Big deal. Biggest of deals. Okay, so December 2nd, 1980, and it looks like it first sold right around $22 a share. Couple 7 stock splits, all 2-for-1 splits. At least that's what AI is saying here. So
split adjusted, the price of shares were around 15-20 cents back in the 80s.
Wow. So what's it trading at right now? I'm going to zoom in. Let's see.
It is trading at 54.39.
All right. So what was its peak there? Was that a COVID rally? I believe that's certainly what it looks like.
So the peak that we saw here, that looks like it's a COVID rally.
Yeah, boy. Short-lived.
So
okay.
But this has been, Nike was one of the first covered call names that I started trading.
Really?
And so when I was getting ready to put together Harvested Financial, I started trading a basket of covered calls to get used to the retail side of things, right? I've been in market making all along. And so I put together a basket of covered calls. I had Apple in there, Berkshire, JP Morgan, Microsoft, Nike. Apple was trading 217 at the time. They're a little lower than that, but they did a 4-for-1 split. JP Morgan was trading 115. They're like double that right now. Mm-hmm. Berkshire was like 210 at the time. They're like almost triple that. Nike was $82.
Oh,
no split.
Wow.
Yeah. They had some ringers there. It seemed as if maybe just Nike wasn't one of them. So
equity to own.
So when was this? When were you getting started with your Nike cover calls?
My log here from this initial basket was August 24th, 2018.
Nice. Okay, so 2018, you said trading right around $80 at the time.
Yeah, I sold the 82 half call and collected 63 cents.
How long of a contract? What was the expiration? How long? What were we looking at?
It was a weekly call.
Okay.
So it was the 8/31 expiration.
Okay. You got all your trades, man. You have every trade ever. how many times
That is not totally true. This just happens to be. I remember when I first built this basket and like I built the logger, so I was like, I know I have a record of some of my first Nike trades.
That's awesome. What are your thoughts on it, both of you? And Mark, I'm sure you have some volatility numbers on it, but what do we think about the stock as of late? So, I mean, I'm just looking here, year to date, a bit bearish, kind of up and down, but what are our thoughts? It's kind of been on a skid since like 2021, end of 2021, it looks like. Thoughts?
I'm curious what everyone else's thoughts are on this. I don't know how to totally explain it. I don't know enough about their business, but like you see them everywhere. I personally think they're great quality products for the sliver I use. So I don't know what the story is here.
Well, I'll tell you this. It's always on the trend spread watch list. It is, I think, a very popular stock among PeakBot traders, truthfully. I'm going to try and find it right now, see what it's doing. I think as of late, it was actually, okay, no, we're still in a bearish trend based on the trend spread watch list. Let me get this up here.
It looks like Nike overall has been bearish since that post-COVID rally. Since it maxed out at like 180.
Yeah, like November 21, it looked like the beginning of the...
We've recently just crossed below COVID lows.
Yikes.
So what is that signaling to us?
Yeah.
Is the 2021 rally, is that all like work from home? Everyone's just going to be wearing athleisure all day? Like, is that the thesis?
Or were they just taking the ride with the market? I don't know. Like, I don't think COVID spurred me to say I need more Nike gear. But I don't know.
I think I would go with Mark's theory. I think there was definitely a boost in sales because of it. But I mean, to take the stock from $100 all the way up to $180, that's a lot of shoes.
a lot of shoes.
Actually, no, didn't they? I mean, they came out the fuel band a long time ago, but maybe there was some sort of like at-home software. Exercise routine software that they might have released during COVID. I know that was popular.
Wearable tech maybe as well.
Maybe.
I don't know if they got into that game.
Just guessing.
Right now, here, I'm going to pull this up. Right now on the trend spread watch list, and again, this is as of Friday's close of market data. Okay. Trending bearish. It's high risk due compared to the other opportunities on this watch list. Closed at 54.58. Ben, on your chart, is it we down pre-market? I'm not even sure what the market's doing.
Slightly up pre-market.
Slightly up.
Futures are up.
Futures are up like 90 points. I saw like an hour ago, so they might be down 200 at this point.
All right, we got to take a closer look at that for sure. But let's just see here. So Nike, good expected value, lower on the win rate side, at least just for this setup as it was on Friday. Really good ROI and a pretty good buffer. This is hitting 3 of the core 4 materials. Now, this is why I'm not trading it as of late. It's a little bit too wide of a spread right now. I don't need to be putting, $450 out there to collect $60 in premium, but the setup would be trying to stay under 57.5. I had the chart up here. If we zoom in, 57.5 is way up here. Let's just get this in here. So over the last month, let's get rid of this line. So here it is, 57.5. This is all of April here. We can see that we've been choppy between, this actually, I wonder if there's any credit in a condor this wide, but right now it's been bouncing between $52 and $59 since this drop at the beginning of April. Right now, again, pre-market trading at $55.30. So about $2 in wiggle room before getting to that strike there. We will see what the watch list has to say this morning. If you're interested, check it out at market open. But
just naively, like if we're at 55 right now and I sell a $2 condor at 50 and 59, so 48.50, 59.61, you can collect like 55 cents on a $2 condor. So there's more juice in there than I think you or I thought.
Yeah, no, I absolutely agree. What were this? Can you just repeat what strikes you had on that, or you were thinking? Like right around 52. Do they have 50-cent strikes? I think they do.
No, they don't. They have the 250 strikes are out there, but everything else is just dollar strikes.
Okay.
So yeah, the 48.50, 59.61.
Okay. Cool. Yeah, there's more juice there than I thought. Might have to take a look at that. I might build that out a little bit later. Okay, very cool.
Is how wide some of these markets are, right? Like you get some nickel wides in there, but you don't want to be crossing a dime wide in there, right? Like that's where, if you're selling a 50-cent condor and you're giving up 5 cents of edge, a nickel doesn't sound like much, but a nickel's 10% of your, the collection there. So something to be careful with if you're getting in there.
That could swing you from a positive EV to a negative EV, potentially.
Yeah.
I mean, at 50 cents, it makes a big deal, but like you start to get to lower and lower prices, and you start seeing some pretty dramatic odd shifts there just from some of that execution slippage.
Yep. We're releasing an update to the trend spread bot. We're still testing it out, but the update's going to come in the next couple of weeks, I'll say. But what we're doing is we're experimenting right now with tightening up the strike prices and pushing out the deltas further. And actually, that's the same philosophy that the bot's going to be using, is how I manually traded my spreads on Friday. And I wound up, let me take a look at my spreadsheet here. I only put $600 of width on the table to generate $159 worth of credit, which is about a 26.5% ROI. And that's, that's just the width of the spread. So my actual risk was lower than that. But the expected value on those plays look really, really good. What I'm just doing and Mark, I'm curious what your thoughts are here, but as a rule of thumb for myself, while we're in this period of updating the trend spread bot, if I can find a 20 delta spread that's paying me about a 20% ROI or higher, that's like my rule of thumb. That's what I'm looking for in order to place that trade. For me, that seems like it's a no-brainer going to be positive EV.
That makes sense. I see the logic there.
Yeah, so that's going to be, again, something that our trend spread strategy will adopt. Of course, still trading with the trend. And remember, the trend is your friend.
Ben can't stop that lately. And that's good. It's fine. All right. So Nike, I'm sure if Thomas was on the show, I think he's traded it the most
Probably
amongst the crew here. But I'll ask him his thoughts. I'm just curious to see. All right, they've crushed the last few earnings. They have the next one coming up in May. Yeah. Anyway, all right. Any other thoughts on Nike here before we move on?
Looks pretty bearish. That's
pretty bearish.
Yeah.
Show me the technical. Actually, show me the analyst rating really quick. Technicals might be still a little wonky.
Well, while we were talking, I pulled up a comparison to say like Lululemon to see like what is this like an athleisure thing? Is this like a Nike fundamental thing? Lululemon's definitely been a little bit more all over the place, but like if we go back to some of the COVID numbers, like they've significantly outperformed Nike. So this feels more like a Nike thing rather than a sector thing. Because athleisure is everywhere. That doesn't seem to have gone anywhere. Nike just doesn't seem to be monetizing it.
Yeah, that's absolutely right. Okay. Well, keep an eye on Nike. Maybe don't just do it right now. It's a little all over the place, but again, certainly looking bearish since that COVID rally. So All right.
It makes sense, like you said, right? Like, you can make money in stocks going down. The vol premium continues to get richer. So, naively selling some put spreads into this, if you think that stock's going down, that's a good play, right? Like, we're seeing increasingly expensive vols, some better EVs, and some directional bias. Like that's a nice little cocktail for success if things line up.
You're 100% right. Look, I think outside of the stock, I'm bullish on Nike long term. Don't think Nike's going anywhere. I do think they'll continue to compete. But best of luck. Best of luck to everybody over there.
They better not. We're all going to have to find new shoemakers.
Yeah, no, I'm telling you, I'm well past the Nike shoe. All right. Let's learn a little something. Let's hand it over to Mark here.
Do it.
We're already talking a lot about these credit spreads. Mark, why don't you dive a little bit deeper here?
Actually, wait, sorry, I don't want to interrupt. I want to ask Mark, what is your favorite, call it, income generating option selling strategy? I don't think I know the answer to that.
I feel like
like as a structure, I'd say my favorite premium collection or short ball, maybe more broadly strategy, I love the broken wing butterfly. That I love being able to kind of fine tune my strikes and biases and have like a directional bent to my trade while also being short ball. And, often I kind of view it as like a vertical spread with a little bit of kicker because you get the extra short in there too. So
yeah,
I like that. And I like the kind of flexibility of it. So I'd say broken wing butterflies.
We should talk about that next week. I want Mark to nerd out on a broken wing butterfly and then have it turn into a bot. This is what I want.
We can do that.
All right.
Yeah.
Very cool.
Next week for more on broken wing butterflies.
So put me together the agenda now. So yeah, dive in.
So 101, what are credit spreads? They're the opposite of a debit spread. So in general, when we talk about option strategies, if you are buying a spread, if you are outlaying cash, that's generally in the bucket of debit spreads. You're paying to put on a trade. You have a defined risk structure. The flip side of that would be collecting money, a credit spread. So you're receiving money, you're collecting a premium, and you're exposed to a risk. So that's why we generally say debits are long, credits are short. You can get into some nuances with that, but broadly, if we just want to talk about two-legged spreads, if you are short that spread, if you put that on and the option you sell costs more than the option you buy, you are going to receive some premium on that trade. And that net premium, that credit that you receive from that initial trade, that's going to be the most that you can earn on that trade. So you'll collect that premium if stock does not move in the direction of your spread. So in the short put spread sense, you would generally want stocks to go up. In the short call spread sense, you would want stocks to generally go down. The short spread or the short leg of that spread, if we're just talking about simple verticals, is typically going to be closer to the money, with the long leg further out of the money. And that long leg is what really protects you in that trade. So with any spread, kind of the main benefit of that is going to be risk management. That rather than selling a naked option, receiving a credit on a big fat naked call or put sale, you actually buy that other option further out of the money to protect you and to specifically define what your range of risk is on that trade. So if we're looking at Nike, we were just talking about how in like a trends type situation, we're probably going to be seeing some call spread sales. Nike sitting at 55.32 today, we'd be selling something like selling the 57 call to buy the 59 call or buy the 60 call. Yep. In that scenario, we collect our 50 cents, something like that, 40 cents, depending on the time frame of that trade. We're earning that 40, or I should say, we're collecting that 50 cents in premium right now up front, and then you're exposed to any movement between 57 and 60. So in that simple example, collect 50 cents, you're short a $3 spread, you're going to lose potentially up to $2.50 if stock goes past your long strike. So in a short call spread, short credit call spread, stay below your short strike. Short credit put spread, you want it to be above your spread. So that premium collection, in a lot of ways, it can be, that is the most you're going to earn. But really what you're getting is you're being paid for the risk that you're bearing in that. So, when I look at credit spreads, I generally want to be finding things that are aligning with my philosophy on volatility, as well as with direction, because you sort of have to have both of those move in your direction for this to work out. Directionally, it can be used to express a simple, I hope stock goes up or down, but also, in a more kind of hedged, balanced way to say volatility is generally more expensive here than what it should be. If you were to delta hedge something out, that you would want to sell credit call spreads, credit put spreads, where vol is higher than it realizes over time. So those are definitely, identifying the direction of trend and identifying the absolute level of volatility that you'll actually be kind of over time earning income on this strategy to the extent that you're picking names that have, more expensive than average volatility.
Mark, we did have a question come in. Is there an advantage to selling a put spread versus buying a call spread with the same strikes?
Doug, I love this question because you are highlighting one of the fundamental option synthetic relationships, that a short put spread is exactly the same as a long call spread. And if you think about, which options you're long and short, a call is a put and a put is a call. So to the extent that you're long the lower strike and short the higher strike, whether that's calls or puts, you're going to see pretty, much the same exact dynamic. It really depends on whether you kind of prefer to be short or prefer to be long, but the risk reward on that trade is going to be exactly the same. To your point, there might be some nuances around the corners with commissions, exercise fees. If you're operating in an environment where there's no commissions, that kind of neutralizes that difference. Exercise fees, of course, can be a thing. Trading out of the position, if you want to avoid that, you're going to have different liquidity, perhaps. But fundamentally, a call is a put and a put is a call. So whether you want to be long call spreads or short put spreads, if those strikes are the same, your risk reward is going to be pretty much the exact same.
Awesome. Very, very thorough answer. And yeah, Doug, I was on the same page as you, thinking about the commissions and exercise fees, because I've explored both routes and have on my own just found that they are exactly the same. But if you're winning on the long side, then yes, you will face exercise fees, at least with most brokers. I think there's only a few that don't actually charge for exercising.
Yep.
So.
And you can also get into early exercise type risk too, to the extent that there was like a dividend or something like that. And as things go in the money, or, you could have quirks where you have a short leg that is exposed to that assignment risk.
Awesome. Well, Mark, thank you for the overview. And we are going to come up with a new list of topics. So if anybody watching has some suggestions on what you want us to cover over the next couple of weeks, shoot us an email, experience@peakbot.com, and we will make sure we cover that. Dillon, I want to ask you, what is your favorite income generating strategy?
It will be the broken wing butterfly. Is that what it was, Mark? I'm sure it will be that once I learn, everything about how Mark does it. Look, I've said for years now that I don't know if I'll ever move away from credit spreads. It's my favorite way to trade. Look, I love a good put credit spread. I want to be bullish on the market. However, as of late, I'm silly not to take advantage of some of these shorter contracts, with trend spread going weekly 7 DTE with take profit built in. I'm comfortable to go both directions. My answer was Iron Condor, just like it was for a lot of people from, again, like August to November. We were just riding that thing. But I love me a weekly put credit spread on on stocks I'm bullish about in the long term. So
Very nice.
call
Nice.
it what you want it. Wheel.
My answer still is iron condor. There's just a lot of flexibility in what you can do with it if you're manually trading it. And one thing that our bots don't do, which maybe they will in the future, is if either side of your condor has been breached, we could potentially close out the winning side of the condor, form a fly, and then collect some more premium, so that way our losers don't hurt as bad. But then we have some downside risk if the stock price swings back in our favor, which we've seen several times, actually many times, with our 1DTE iron condor strategy, where we could take profit on the put side in the morning, and then price swings and we take profit on the call side in the afternoon, or vice versa. So by closing down your winning leg in the morning, for example, and forming an iron fly, that would kind of hinder that sort of scenario. But all things to think about, and might make sense to do that in the future.
Absolutely. Always adapt or die. We're always moving with the market, making adjustments, making new strategies, etc. So I think we should take a look at some economic events going into this week. Before we do that, and we definitely have a special offer we want to talk about with PeakBot and Tradier. So hang tight. 6 months of automated trading and commission-free trading exclusive with Tradier. We're going to share the info in just a minute or two. Just a quick maybe market analysis, SPY analysis, whatever we want to call it. Mark, generally speaking, how do you feel about this week before we look at the economic events?
It's going to be choppy out there. I think we are still in tariff processing mode. I don't think anyone knows what's going on with tariffs. So I think that's going to be a little bit of a chop backdrop. I think we're still in that adjustment phase. While vol has come in quite a bit over the last 2 weeks, it's softened both in the term structure and in the near term. It's still VIX readings in the upper 20s are not exactly placid sailing. So I think regardless of what your strategy is, have to be alert to the possibility that things are really going to move. But vol can also come in pretty quickly too. So it's delicate trading out there, but always opportunity, that means.
Absolutely. Definitely treading lightly over here myself, so can get behind that. Ben, let's take a closer look at what we got going on this week.
All right. Interesting to see that nothing really of note, at least on TradingView's economic calendar, until 11 a.m. Eastern this morning. And then we've got a number of Fed speeches later today. So it's not J-POW, but beware. On Tuesday, we have some more Fed speeches, but nothing else really of note. It's going to be Wednesday, I think, where we've got a lot of economic events. We've got a bond auction. We've got J-POW speaking. So Wednesday, there will be some activity. It looks like Thursday, we've got some big data in the morning, building permits, housing information. We've got a pretty quiet-ish afternoon leading into Good Friday, and the market will be closed on Good Friday. So we've got a short week. Dillon, we should go golfing on Friday. Take advantage.
I'm more so thinking like I was nervous. I'm like, okay, are my expirations right for all my contracts this week? Friday? Okay, I'm good. Yeah, let's go golfing.
Doug actually brings up a good point that I nearly forgot about amidst all this macroeconomic stuff, is that earnings season starts again this week. I think we've got Alcoa on Wednesday afternoon.
Click on it, Ben. Click on earnings. See what it shows. Go ahead, Mark. Sorry.
No, so if just tariff and economic policy wasn't enough, now we've got some individual name fun coming up.
Oh yeah, absolutely.
Yeah. Oh man, earnings season is both fun and terrifying.
Yeah, it is. Opportunity everywhere, risk everywhere. Got to know the stock like the back of your hand if you're going to get in during earnings. In my opinion, not financial advice. Also, a quick note on PeakBot's watch lists. If a stock is reporting earnings within, I believe it's the next 7 to 10 days, it will highlight that for you. The entire line will be highlighted red. Just saying to watch out here. Probably some more premium, probably some more risk. But there's a lot of companies here. I wasn't expecting.
Oh yeah, a lot of names. Yeah, I mean, tomorrow.
Goldman's today, MTB's today, Bank of America and Citigroup are tomorrow.
Yep. Johnson & Johnson's tomorrow.
Big ones.
United Airlines is tomorrow. Game Square, not GameStop, is tomorrow.
What? Game Square? What's Game Square?
I don't know. That reminds me of the Game Sphere. Remember the Game Sphere?
Yeah. God, what trash. And what about GameCube?
GameCube.
Mark, did you have a GameCube?
I did not have a GameCube. That was Nintendo? Nintendo?
Yeah,
that was one of those consoles that kind of fell between the cracks.
Yeah, it did, Ben. I will say, I think we grew up right when that was getting big. I never had one, but I feel like you did.
Yeah, we
a
did.
couple of our other friends did.
I was a 64 generation.
Yeah.
Oh, well, we for sure
but
had that.
You probably appreciated it a little more than we did the 64 days.
Were you a Sega Dreamcast kind of guy?
No, Genesis for sure.
Was that your first game console, Genesis?
So my first game console wasn't until I was like 15 and bought an old Nintendo 8, just as like a retro thing.
I'm not even sure what that is.
The regular Nintendo NES.
Okay. Got it.
I think Nintendo 8-bit, right? I think because 64 is 64-bit. Anyway, more recently though, in like 2020, I think this was a COVID experiment. My wife and I tried to get an old Nintendo 64 and get it hooked up to the TV. Far more difficult than you would expect because everything's in HD now, and like I'm no technologist, but like the UHF signal of like old, systems doesn't play well with it at all. So spent a long time, went to many GameStops before GameStop was a thing, and tried to get that 64 hooked up because I wanted to play some old Bond. I wanted to hold the old controller and like do some Mario Kart, but it's really hard to get that vintage system connected.
Dude, some of those early Bond games were incredible. Boy, we got to maybe go back into maybe we cover GameStop next week again. We can talk some more video games. Anyway, so things get a little spicy maybe toward the middle of the end of the week from economic events. Keep an eye on earnings if you're trading individual underlying this week. Anything else, guys? Oh, short week. So keep an eye on that. And anything else? Any Trump speeches, Ben? You have that site up for Trump? Is Trump got a tea time today?
I don't know. I don't have it.
Atari, throw that up. An Atari 2600. I love that.
Oh, Atari? Never had. I don't know if I ever had. I think we were past that. I don't know if I had an Atari. 26. By the way, I'm going to tell you this. I didn't know that the 64 versus the 8 versus whatever was bit. What did you say? Bit? It based on the
8-bit versus 64-bit.
I didn't know that.
Yeah, SNES might be 16.
I have a. Wait a minute.
Look at that. Are those ruffles in the background?
You just need an old 2-liter of Pepsi next to that.
Yeah.
And you've got yourself an evening.
Sure do.
Hold on.
Oh, look at that.
I have an Atari Flashback 8. I don't know what this means to anybody, but I have it right here. There's all these games on the back. Mark, we're going to do this and then we're going to wrap. I'm going to hit some of these names and see if you're brought back into your old world. Air Raiders, Asteroids, Basketball, Bowling, Canyon Bomber. Anyway, this is turning into a bad idea. But I just needed to show you guys. I'm ready to pull this thing out and play it. Has 2 controllers. Yeah, anyway, I'm a distraction. There's 105 built-in games.
I love the vintage look of it too.
Huh?
I love the vintage styling of that.
Yeah, I think I got that at Kohl's. You know how Kohl's will get you in those middle racks sometimes with the throwback video game? Haven't even opened it. Okay. Gentlemen, I think we're good here. We got 15 minutes till the market opens. Wishing everybody the best of luck. I'm sorry. We got one more thing. We got to talk about our new favorite promotion with Tradier very quickly.
Hit it.
Let's just get this on here. Okay, 6 months of automated trading with PeakBot for free. And you're getting access to PeakBot Pro, okay? So that's access to exclusive bots that are only available to Pro subscribers. And you're getting Tradier Pro, which is normally $10 a month. You're getting commission-free options trading for free and automated trading with PeakBot, full access to all of our bots. For free, 6 months. Just go to peakbot.com/Tradier or grab that QR code. Yeah, we still do QR codes down there in the corner. If you're already on Tradier, you already have a Tradier account, you can still get 1 month of PeakBot Pro for free. Okay, so check us out. Go to peakbot.com/pricing if you already have a Tradier account. This is a big deal, people. Incredibly simple to get started. Let us know if you have questions. It's never been easier to automate your trades. So, anything I missed?
No. Let's wrap her up.
Let's get out of here. We will be live. Sorry.
I just said happy trading.
Happy trading to all. We will be live again Friday, just shy of noon Eastern, with the automation station. But as always, thank you for tuning in, and we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.